be a rally, base, rally. Hey, what's good, everybody? It's your man, Prof Zones, and Prof is not for professor, but for profits. And yeah, guys, I'm back. Episode 6, GroundUp Breakdown, Episode 6, Season 2. Hey, guys, we've come a long way, eh? We have come a long way. We are definitely 6 weeks in. So, yeah, with that said, guys, we had quite an interesting NFP week. It was very, very interesting, guys. Like, very interesting. I mean, look at the overview on the hourly chart. I mean, look at the overview. Would you look at the past 5 days? I mean, if you follow GroundUp Breakdown episodes, guys, you should be making some money. You should be making some money. Let's be honest. Because, because most, I think since episode 1, we have just got the overall direction for the week correct. I don't think we've got it wrong once, but I'll check that. I'll actually check those facts and yeah, see if it's actually true. But to my knowledge, I don't think we've missed anything. So yeah, guys, let me just give you a quick run through of what we were looking at last week. So as I said, guys, that this zone here is very strong. Buyers are there. Buyers are very present. Hence why we actually created this week, last week. And then what did we talk about this week? That when the buyers get into the zone again, they will want to get triggered. So the resting buyers on these wicks got triggered and the market pushed all the way up. So if you remember, guys, on episode 5, I said this was our internal range liquidity right here. And we were targeting at least this internal range liquidity, right? Because this is our external range right here, right there and right there. That was our external range liquidity. So what were we looking for, guys? What were we looking for? We were looking for price. We were looking for price to just sweep. Let me just get this. We were looking for price to just sweep this liquidity, right? And after it sweeps that liquidity, we look for buys. So remember I said overall the week will be bullish on AUDUSD. So now let's go deeper and see what actually happened at that low. Now let's go straight to the M15 time frame and actually see what happened at that low. Can you see, guys? Beautiful. Beautiful. So what happened is price, let me just do this. There we go. Price opened up on Monday. As I said, price will most likely open bullish and then come fetch this liquidity, right? So price opened bullish and then dropped all the way to fetch this liquidity to actually sweep that liquidity over there and head for this one. And I said, as soon as the price gets there, we need to look for change of character on our smaller time frame, which is your M15, M5, and also, if you may, M1, right? So that's exactly what happened. As soon as price swept this liquidity, it started to actually show us some bullish signs, some strength towards the upside. Why? Because all of a sudden we were not forming lower lows anymore, and we started to form higher highs, right? Into Tuesday. And then the market just liquidated this low right here and started to push up. And if you missed that, because you don't trade Asian session, then it was as simple as London kill zone. You look for your fair value gaps that were created in your Asian kill zone. You trade them in London, right? And this is the last fair value gap that was there. And as you can see, in London kill zone, the market reacted. And there was a nice buy right there, a very nice buy. And of course, since we know that we are bullish, what would you target? You target Monday's high, at least. And that was a solid 40 pips. So with a 10 pip stop, you'd have an easy 1:4. Clean, a clean 1:4, right? But we know that overall, we are targeting this liquidity here, because that's where we were like, we need to get to that point. If we are going to be bullish, we definitely will get to that point. And as you see, guys, we hit that point so nicely. And the nice thing about that is there was another trade that was resting right here at this order block right here. That order block right there, right? As you can see, the market done the same thing. We gave you an opportunity on Asian kill zone and London kill zone to get involved in that buy. Right? Cool. So that was Wednesday already. And then Wednesday, the market actually reached the liquidity, the daily liquidity that we were looking at. Right, guys? As clean as that. And as you can see, we were also looking for, as soon as we reached that liquidity, we had, just go look at my Instagram. I'll give you a recap of the analysis that we were doing and stuff like that. We had an H1 extreme fair value over here. And as soon as the market tapped into that, we knew we were looking to sell it. That's why we were selling NFP. We were selling AUDUSD, right? Because all we wanted to see is a change of character. And a change of character happened when price. So we had a nice breakup structure there. And then we had a nice change of character there. And then guess what? The market trickled down and broke structure again over here without reaching into at least this order block right here. At least that order block right there, right? So basically, when it broke the structure again, now our point of interest changed. Our point of interest now changed. Changed into what, you might ask? Our point of interest changed into this zone right here. This supply zone right here. Why, you might ask? Because that supply zone has a lovely order block in it and a lovely fair value gap. And can you see what happened in NFP? The market just touched that order block right there and dropped to create a lower low. Right? Breakup structure again. And it's not a coincidence that the market pushed all the way up to react off this order block right here. And as you can see now, it's pushing down. All right. Okay. And created some very nice liquidity over here. So with that said, perfect. It was a lovely week, guys. Stay tuned. So, okay, now let's go into the analysis that we are looking for this week, that we are looking at for this week. Let me just get rid of all of this. Get rid of all of that. Go to my daily. Get rid of that as well and that as well. All right, sharp. So now let's go to our weekly. As you know, we love our weekly time frame. right? We need to see, and a lot of people say top-down analysis doesn't work. No, guys, it does. It does. If it doesn't work, how are we able to actually see all of this to see where the week is probably going to take us? How are we able to see that if top-down analysis doesn't work, right? So, in fact, let me give you a nice nugget and actually do a real top-down analysis where I'll take it from the monthly, right? Take it from the monthly. Can you see that on the monthly, we have this lovely fair value gap right here that we filled, and now we are running away from. So what do you think on a monthly time frame, where we're going? As you know, the market moves from liquidity to fair value to liquidity, right? So with that said, guess what? The market is heading here. That's where the market is going, for that liquidity over there. Okay, yeah, basically, guys, what I was saying is this is the liquidity that we are going to go for, right? Or that we are targeting, right? If this fair value holds. And so far, for the past 2 months, it has held, right? Because if it didn't want to hold, guess what? Then the market would have easily what is it? Now it's April, right? March, February. So on March, the market would have easily fetched this liquidity. But it didn't. It actually decided to react off of March and react on April bullishly. So there's high chances that the market will keep wanting to go up and fetch this liquidity right here. There's a high chance that can happen, right? So yeah, overall, we are kind of bullish. So with that said, let us move into our weekly time frame. And can you see our weekly time frame? Right where that fair value is, that's where the bullish pressure started to get in, right? As you can see with these wicks. And now we have closed with a engulfing candlestick, right? And what does that say? That says that we are expecting some more bullish pressure. So the market can just wick down, and after it wicks down, give us an opportunity to get involved in our buys. And then the market just pushes up to fetch this liquidity right here, right? So this can easily happen this week, right? Why? Because there's a lot of bullish pressure. Now let's look at the possibilities on a daily time frame and see where we might get involved. Here we are. We have what? We have a lovely fair value gap right there. A lovely daily fair value gap. Right? We have a lovely daily fair value gap. So that's the most extreme, right? And added demand zone as well. So this is actually quite beautiful. Okay, with that said, now let's move into, okay, let's just zoom in more. And we can easily, as I said, target this liquidity here, right? And here. We can easily target, because this is some lovely liquidity. Some lovely liquidity. So we can easily target to sweep those highs. And let's just do this. And that's if we're bullish for the week, which it looks like we will be. So we can easily target that. And this buy side liquidity right here. Terminal range buy side liquidity. Perfect. Okay. Now let's see what's resting above this buy side liquidity. We have a lovely order block with a fair value, right? With a fair value gap. And what I like about that is, so we have a nice OP. Okay, we have a nice OP plus an FVG. And what I like about that is this sell side imbalance and buy side inefficiency. What I like about it is, boom, I'm going to mark the 50% of that whole range, including the order block, and not just the fair value gap, right? So let's mark the 50% of it. Boom. Okay, let's just say that's the 50. Right there. There we go. And what I like about the 50 is it's right above this buy side liquidity. So the market can easily tap into it and then wanting to start to drop again, right? But now let's move into our H4 time frame, the one that we love the most. So as you can see, this daily fair value gap is coupled with our H4 fair value gap, right? It's coupled with our H4 fair value gap. So that'll be a lovely area to buy from. That'll be a very lovely area to buy from, right? And as you can see, we've already cleared this fair value gap here. We've already cleared that. So guess what? Let me just delete, what are these doing here? Right, we've already cleared that fair value gap. And can you see that the market left such a huge wick down here? Such a huge wick down here. So that wick can easily be filled. And when that wick is filled, what do you think the market will actually try to do? The market will try to fill that wick and then tap into this fair value gap. That'll be lovely. Then we can look for any change of characters to the upside so that we can get involved in our buys. Right? So, okay. So yeah, that's what we can expect on our on our H4 time frame. So yeah, guys, now let's move into if the market actually just carries on pushing down, right? If the market just breaks this fair value gap, violates that demand zone, and just keeps dropping, then we'll be looking at what? We will be looking at price liquidating these equal lows right here, right? Price liquidating those equal lows right there, and then reacting off of this small baby right here. This small fair value gap right there. So as you can see, we have lovely liquidity here. Let me just mark it properly. We have lovely equal low liquidity right there. We have lovely equal low liquidity right there. Sorry, right there. And resting below that is a lovely H4 fair value. Right? There we go. So with that said, if the market carries on to violate that liquidity, this is the point that we'll be looking to buy from and then into any fair value gap that it has left over here, right? But if the market respects this fair value gap here, this daily and H4 fair value gap, and gives us any change of characters on the smaller time frames, then we will be buying this pair into this liquidity over here, this buy side, targeting that buy side liquidity, right? So yeah, With that said, guys, let us move on into the H1 time frame. The H1 time frame. As you can see, this fair value gap also bleeds into the H1 time frame. And that is very beautiful. That is very beautiful for the fact that it bleeds into it, because now when we look at it, we have lovely liquidity right here. A lovely buildup of trend line liquidity over there. Over there. And as you know, guys, we always need liquidity close to our fair value gaps, just like how we have it here. We have a value gap here, and right above it, we have liquidity. So when market clears that liquidity, taps into these fair value gaps, and then give us any form of change of characters to the upside, and then we can easily take that trade all the way up and having our first take profit at this fair value gap right here, right? Why our first take profit will be there is simply because this H1 fair value gap right here is actually valid because it also has some nice liquidity right here, nice liquidity buildup, right? So with that said, we know that this H1 fair value gap can be our target if we're buying. And the nice thing is that target is about 70 pips away, guys. That is a lot. You can easily get yourself for 1:5, because you know we like to target our 1:5s. You can easily get yourself a 1:5 within that range, and just 2 entries, that's like a nice 10%. Come on, guys, you passed your phase 1 or you passed your phase 2, or you're done for the month, you know? Because you know we don't target crazy percentages for the month, simply because this is all about being consistent and proving to investors that we can be consistent in specific percentages. So yes, guys, that's what we are looking for. So now with that said, let us move into the M15 time frame and wrap this analysis up. As you can see, guys, in this M15 time frame, we were able to what? To break structure, push back up into this fair value, this order block right here, and now we are reacting off of it. But the way we are reacting off of it is not very promising. So this could easily be a rally, base, rally into this fair value gap right here that we've been running away from, because looking at the buildup of liquidity. And when that happens, then we will look for any change of characters so that we can grab that trade to the downside, right? And targeting what? This daily H4 plus H1 fair value gap. And then from there, then we can see if we have any more change of characters to the upside over here, so that we can buy it back up in the overall direction that we are looking at, right? So it might just be a similar thing that happened last week, where we knew that Monday we might be selling just so that we can start buying from Tuesday on. So it might be a similar thing where Monday we can easily get into sales, and from Tuesday or Wednesday start buying. So yeah, guys, that's basically what we are looking for. So just a quick recap is that if the market liquidates this liquidity and taps into this H1 fair value gap, we look for change of characters to the downside, and then if we get that, even if it liquidates this buy side liquidity here, and then we get change of characters still, then we can easily still take the market down into this D1, H4, and H1 fair value gaps. And then we know from there, then we can look for more change of characters to the upside. And if we do get that, then we can trade the market back up. So yeah, guys, with that said, this is episode 6. I know this was a little bit longer than most episodes, but yeah, guys, this is episode 6 of GroundUp Breakdown. So stay tuned, subscribe, share, tell a friend to tell a friend. And as always, guys, we plan the trade and we trade the plan. Don't forget to head to my Instagram for some recaps on what we do during the week. But yeah, with that said, guys, this is your man, Prof Zones, signing out.